Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh edition of Opening Bell with me, Lovisha Darad. Well, it's the last day of the week and what a stellar uptrend we have seen yesterday. For the week also, Nifty is already up by 1.5% and majority of these gains have come in yesterday as well. Today, however, we could see some consolidation because as the gift Nifty trends are pointing out to a weak start for India as well. Global cues, global handovers aren't coming quite strong either as well. US markets have started 2025 on a very muted note, and one key level that could make investors very nervous today, that is your US dollar index, which has hit over 2-year high above that 109 levels. So let's understand what your trading strategy should be at this point of time, what the stocks are in focus. Do not forget to post your stock related queries on our live feed and we'll take them up shortly. But first up, let's take a quick look at the top headlines this hour. To New Year, as all indices close in the red, the S&P 500 and Nasdaq fall for the fifth straight session, registering longest losing streak since April 2024. Asian markets open mixed following weak cues from Wall Street. The gift Nifty, however, is suggesting a lower start for our own markets. Crude gains over 2%, taking Brent to over $76 per barrel on optimism over demand from China following Xi Jinping's pro-growth comments. Gold prices hit over 2-week high on safe haven demand. Investigations into New Orleans attack and Las Vegas cyber attack explosions revealed that the suspect and driver served at the same US military base. However, Joe Biden says that both are separate incidents while agents continue to look for possible linkage. All right, as I mentioned, a strong close coming in for Sensex and Nifty yesterday. Nifty particularly was well above its 200 DMA levels and clocked the largest single day gain in 6 weeks. What we saw was the majority of the support came in from the auto, IT as well as the financial stocks. However, the broader markets that underperformed, while they did close in the green, but they underperformed large caps in yesterday's trading session. Now going ahead and moving forward for this week and next week onwards as well, investors will be watching out how the Q3 business updates from India Inc. pans out. Now let's take a quick look at how today's trade setup looks like. Very strong cues coming in. First up is the option cues data. Nifty put call ratio that rose to 1.23 levels from 1.06 levels in the previous session. Well, this is the highest number since December 3rd that we have observed. Well, next up on your screen is the F&O ban list. RBL Bank is added to the list while Manappuram Finance is retained. However, no removals were done at this point of time. And next is the fund flows data. Well, yes, FIIs, once again, they have broken their 11 days of sell-off and they've turned net buyers in the last session. Well, we were waiting for them to come back, and because it was the New Year's holiday as well, and now finally, we can see some buying emerging from the FIs as well. They've bought around 1500 crore rupees worth of Indian equities in the last session. DIIs, on the other hand, they have bought around 22 crore rupees worth of Indian equities. So major of the uplift that came from the markets yesterday was after the FII buying that we saw. Now just a couple of minutes before we hit the opening bell, pre-open rates, however, are pointing to a good start for the Indian markets. Well, the gift Nifty was indicating a weakness in the Indian markets, but the pre-open rates are off to quite a good start. Sensex is up about 200 points in the pre-open, while Nifty is above that 24,200 odd levels in the pre-open rates as well. But on that note, let's quickly get on board with our technical expert of the show, Raja Venkatraman of NeoTrader. Raja, good morning. So good to have you back and wish you a very happy New Year.
Yeah, thank you for inviting me to the show and wishing all the viewers and you a very happy New Year.
Thank you so much, Raja. But Raja, strong recovery for markets yesterday. Nifty is well above its 200 DMA levels. What are you watching out next?
Yeah, considering the way the market is panning out, the 200 DMA, of course, the most talked about indicator as far as everyone is concerned, it was languishing below that, and finally yesterday we somehow managed to move above the 200 DMA. Now closing above the 200 DMA is maybe one part of the agenda, but the remaining part of the agenda is to sustain above it. Now with the last trading day of the week, So I'm sure that there could be a mix of buying as well as some short covering action that may emerge. Now, the short covering action would only emerge if the 200 DMA crossover is held. So the first half an hour of today's trading session is quite critical, because if you are able to hold on and if you are able to move further on from there, then it would definitely signal that yes, there is some revival of bullish momentum that is being seen. Now, when you talk about the levels, we need to see if this time around, when the recovery is going to take place, whether the Bank Nifty is going to aid. Now, the option data clearly suggested that the lower levels were well defended, and we were having supports around 23,400 to 500. The last low was well defended, and 500 around. Now the next set of supports are around 23,800. Now on the upside, I would say that 24,500 would be the par for the course, because I don't see the Nifty sustaining this bullish momentum here unless we witness some good triggers. And now for those triggers, the Q3 result season is already started in small spurts. Now we are going to see it emerging in greater depth, and well, everyone is anticipating a better Q3 considering the GST collections. So I presume that we would see some more bullish momentum step in. Now, to ensure that all of these things happen, well, the IT, which did well yesterday, IT led from the front the last time around. Now, if IT steps into the fore, now this time the order which I have been stating every time, which is which was IT, Bank Nifty, and Nifty. Now, I would say IT, Nifty, and Bank Nifty would be the order which we can consider for this month. Now, if markets have to really move ahead, we really need to understand that. The kind of momentum which we saw in 2024, one cannot expect in 2025 because of various reasons, with the kind of macroeconomic influences, with the global scenario. So all these are right now impacting the kind of momentum which we are expecting to see in 2025. So yes, it will take some time for all of these things to manifest and resolve. So once these things are done, so it will, based on my analysis, I feel another 1 to 2 months would go in these kind of reactionary nature. So as part of the investing or short-term investing community, we need to keep booking profits. Well, as far as the traders are concerned, they need to look at the direction in which the market is flowing and take it on from there. So as far as Bank Nifty is concerned, levels of around 53,000 continues to be the mainstay. And on the lower side, we had defense of 5,500. So now the next set of supports is around 51,000 going forward for the next week.
Okay. What about Nifty Auto Index, Raja? Because stellar gains past 2 days, December sales figures were also, better than expected. Do you expect the bullish undertone to stay the same?
Yeah, it looks like after the festive season, sales were added, and the kind of reporting which we are seeing, the auto index is showing a good stellar move here, and that is prompting many of the auto names to move up. Last week we had discussed about M&M, and M&M was one of the best performers from the auto index space, and the kind of momentum which we are seeing in other stocks which were largely beaten down. So from that, I would see that TVS Motors is the next bet which I have from the auto space, because the kind of sell-off which we have witnessed. So now the momentum or the shift in the participation would be towards stocks and sectors which were beaten down and are now looking for some revival, and those were the stocks that will be participated in.
Okay. What about Bajaj Auto as a stock, Raja? Because, the December say, because the stock among the auto pack that was not doing very well. What do you see on the charts for Bajaj Auto stock?
See, Bajaj Auto has not given the kind of momentum which one would expect from the Bajaj Auto, which after hitting crossing, getting into the five-figure mark, the stock witnessed some sharp sell-off there. And yes, this sell-off was likely because of the kind of momentum which market went through. Now, what we are noticing is that the stock is trying to stabilize at the current levels. So, if one has to participate, it is better to participate in stocks that are showing some upward trajectory. The stock is showing some signs of revival. I would still wait for some more revival measures to emerge. before I take any trade in Bajaj Auto.
Okay. Any other themes that Raja that you believe that investors should be watching out for this year?
Yeah, the other theme I would like to highlight is the EV theme. The EV theme, which was waxing and waning in 2024. Now there is a growing acceptance amongst the Indian community up to go for a EV vehicle, and with the continuous race for grabbing a share of the EV space with many of the automakers, I'm sure that the EV theme is going to get a lot of prominence. So anything connected with EV would get a lot of traction here. So EV could be one of a good theme in the year 2025.
And what about IT index? Because we will be having the Q3 results, which will be beginning from next week onwards, Raja. So how should traders position themselves for IT pack?
IT index has definitely been one of the stellar performers, and especially with the US elections showing some good, tailwinds to the IT sector itself. So I think that the results which are going to come out now definitely going to be much more favorable. But now, when you consider the kind of moves which we have seen, 30% plus run in stocks like Coforge, persistence. So there is bound to be some profit booking emerging because they are getting into a deep overbought zone. So at this point in juncture, if you have to look for some stocks that are showing some bit of revival from lower levels, because IT sector is definitely going to be in play. And in terms of the valuation, they have not done anything much for quite a long time, and that is why they are now attracting a lot of investors into the IT pack. So stocks from the big names, which I would like to suggest, is one is HCL Tech. That stock is doing pretty well, and the other is Wipro. After X bonus, it's also picking up some traction. So these are two stocks which, as an investor, can select because it has got good future and good growth. And now with IT, again attracting attention from different parts of the trading and investing community, I'm sure that IT is going to also be in play in 2025.
Okay, all right. Since we are talking about IT, what about Wipro? How do you see? Because we did see brokerages coming out and saying that they will be reporting a very flat sequential growth in Q3 as well. What are you seeing for Wipro stock? Just 30 seconds before we go to opening bell. But yes, just short sentences.
Yeah, Wipro is quite encouraging, but it's more of a long-term nature. So those who are having the patience to hold for a long term can see the money double in the next 1.5 years.
Okay, some positive and optimism that is coming in for you. But just less than 10 seconds, we are going to hit the opening bell as well. The pre-open rates were pointing out to a good start for the Indian markets. However, the global handover has been quite mixed. US markets did close on a lower note. However, Asia Pacific did close on a fairly, on a larger and a higher note. But the first rates coming on your screen, Nifty below that 24,200 mark, flat in the red at this point of time. Advanced decline ratio, if you look at, fairly, it's a tight competition right over there. Sensex also flat in the red, below that 80,000 levels. Mid cap index outperforming at this point of time. We can see a gain of about 2/10%. On the other hand, Bank Nifty has also opened flat in the red as well, seeing a cut of about 1/10% at this point of time. Only one Nifty 50 gainer at this point of time, that is your SBI Life Insurance, which is seeing a gain of about 0.4%. But let's see how the other sectors are performing at this hour. Nifty Metal Index flat in the red, Nifty IT Index also flat in the red. Do note that Nifty IT Index was also one of the top contributor to the market rally, but today it's seeing a cut of about 0.3%. Nifty Auto Index, which saw 2 days of stellar gains after the December sales figures, it's flat in the red. It is opened flat in the red at this point of time. And of course, Nifty Metal Index, as I mentioned, that it is flat in the red. Small caps and mid caps at this point of time, they are outperforming the large caps, seeing a gain of about 0.3 to 0.4% gains. If you look at the top gainers on the Nifty 50, that includes the likes of ONGC, Trend, HUL, SBI Life Insurance, Britannia, NTPC. So some of the FMCG names are doing well in this weakish market. Some of the defensive plays are gaining strength in this otherwise weak market that we have opened with. On the other hand, we can see the top losers on the Nifty 50. That includes the likes of Hero MotoCorp. Hero MotoCorp, after we saw a very weak December sales figures, it has declined about 2%. Hindalco also down about 0.7%. Dr. Reddy's Lab down 0.6%. TCS, Shriram Finance, Tech Mahindra, all of them seeing a cut of about 0.4%. Even Bajaj Finserv, after yesterday's very sharp rally, 7% uptick that we saw yesterday, today it's seeing a bit of a consolidation and profit booking, and today it's down about 0.3%. So a weak start for the markets. Hope we regain strength, but let's see how it pans out. But talking about the stock in focus, that is your Avenue Supermarts, well, DMart. The company did report a strong performance for the third quarter of FY25, that they have come out with their business update, where they have said that their standalone revenue from operations have increased by 17% year on year. The company has also stated that its store count has stood at 387 at the end of the December 31st. The stock is also reacting very positively, 10% uptick. Raja, significant underperformer past 6 months, but the stock is reacting very positively in today's trading session. What can we expect next?
Yeah, considering the FMCG scenario, the kind of consumption numbers which were reported. So all this prompted to the decline in the FMCG sales. Now, what has happened is that, well, the festive season is impacting across the board. And what is being seen in demand is a strong recovery from lower levels. Now, with the kind of numbers which they are reporting and the kind of expansion which is being seen in Avenue Supermart, it clearly says that we could be looking at some kind of recovery here. Over the last this entire week, we have been seeing some FMCG picking up in terms of the price action. Now, I see that DMart could be a stock that can be considered at lower levels, because overall the stock was showing signs of bottoming out. Now, with this positive news flow, I think that we can look at it from an investing perspective, with an outlook of reaching towards 5,000 within the next 3 to 6 months.
In focus, that is your Bank of Maharashtra. Well, the stock is once again reacting very positively after its strong Q3 business update. They have seen a total business of rising about by 17% year on year, while gross advances rose by 21% year on year, and deposits have also climbed by 13.5% year on year. Bank of Maharashtra up about 4% at this point of time. Raja, a very bearish trend recently on Bank of Maharashtra, but I think this Q3 business update that they have provided instills some optimism on the horizon.
Yeah, so the banking space itself has been undergoing some kind of consolidation and profit booking. And in the banking, if you go to the PSUs have been witnessing very limited traction, and they were more pressure to the downside. Now, what has happened is that over the last few weeks, there has been some consolidation happening in the banking space. And now, with a healthy Q3 update, the stock could show signs of bottoming out. It's not out of the woods yet. I would look to wait and watch Bank of Maharashtra before I start participating in it.
All right, start participating in it. Well, let's move on to the next stock in focus. That is your NHPC. The stock is seeing good gains, 2% uptick, after the company said that it has received about 250 crore rupees as an insurance amount for Teesta power station damages. Well, last year in August, we saw that a landslide at the Teesta 5 power station had affected parts of its tail race tunnel, and also a severe flash flood in October 2023 had affected Teesta Basin, which led to the complete shutdown of Teesta 5 power station as well. Raja, past 6 months, NHPC has exhibited a very negative trend. So this news does come as a positive to the stock in a positive direction. But what are you watching out next for the stock?
Yeah, when you consider the kind of move which it has enjoyed over the last maybe 2 to 3 years, the kind of profit booking or correction which we are seeing, it's quite small in that regard. Now, what has happened is that now it is awaiting some tailwind, and these kind of tailwinds are what one is expecting in a strong mover. So yes, it is definitely on the cards of many people as one of the tracking list, and the dips which are seen right now are suitable opportunities to get into because the overall momentum is still quite strong. So these kind of corrections should be considered as an opportunity to get into the stock.
Okay, opportunity to get in the stock. But let's quickly take some of the viewer queries. Lots of them lined up. First up is coming in from Naveen. He's asking the view on Power Grid. Power Grid, no action in the month of December. Raja, how do you see the near-term holds for Power Grid stock?
Yeah, the CPSE sector was one of the best performing sector of 2024. Now, after witnessing such a strong surge, the ability of the stock to sustain the upward trajectory again, it could look to be a challenge. So, and now with the months looking at some overweight situation, so the profit booking which is being witnessed could continue for some more time. So it's best that one holds on. If one has an investment, one can exit and look to buy at lower levels. So suitable levels at lower levels are around 280. But overall, the stock momentum is positive, and one should look to book some profits now and add in at a lower level.
Add at a lower level for Power Grid. Let's take another viewer query. Naveen is asking on Irida. Irida is a stock, it's seeing a sharp up move after its strong Q3 update. What is the next that you're eyeing for, Raja, on the stock?
Yeah, so the stocks which we are discussing are all, from the majority are coming from the power theme. So the power sector is something which is going to gain traction, and with the government supporting the resumption of the projects, the stalled projects. So you are seeing that the power sector is once again in demand. So IREDA, once again, it is a very fast mover. It's on the attention list of many of the viewers as well as the investors. So setup looks encouraging. I think that the stock can continue further. The stock has a target towards 320 levels within the next 1 year.
Okay, 320 levels within the one next year. Well, let's move on to another viewer query. This is coming in from Hemant. He's asking the long-term view on Bajaj Finance. He's holding 63 shares at the rate of 6,800 average rupees, and he has bought them 6 months back. So he's asking whether or not he should book profit. Bajaj Finance, yesterday we saw a very sharp rally as well, Raja. What can we eye out next? Should he hold at this point or should he book profits?
The entire NBFC space is looking forward to encash from the overall RBI policy and ensuring that the momentum which we are going to see here in the banking space is just about to emerge. So this is not the right time to encash. One should look to hold on. And over the last, I would say, last 2 years, the stock has basically been oscillating between 7,600 and 6,000. So there is nothing to worry about. When the digits are more, the volatility or the range will also be more. But if you are looking at it from a year or 2 year perspective, then the movement above 7,600 or 7,800 could be a time to actually add to your position. So one should hold on.
Okay, so hold coming in for Bajaj Finance. Let's move to another viewer query. That is your Rajesh is asking the view of IndSwift Laboratories. IndSwift Laboratories, Raja, in December we did see a breakout to 120 odd levels, but again the stock has fizzled out those gains. Can we expect the momentum to stay bearish for the long term?
See, when the kind of momentum which we are looking at, the one should understand that every stock will not go in line with the market. So at the current juncture, this particular stock is witnessing some profit booking, and I would say that if it continues to move below 100, then it's a call for exit. Otherwise, one can continue to hold on and wait for some more upside.
Okay, wait for some more upside. But let's move to another viewer query. That is your Shweta is asking the view on Texmeco Rail for the next 6 months. She's bought it at 197 levels, and she's asking if she needs to exit, what level should she exit or should she hold? for the next 6 months horizon. So she's bought it at 197 and the stock has been trading at 200 odd levels. So very slight returns that she's seeing, almost nearly nothing. So what can she do at this point of time? Should she hold or should she exit?
Yeah, Texmaco, after her entry levels, the stock did see almost 100 rupees upside. Now the stock has corrected again back to its entry level. So now looking at the budget coming up and the rail stocks that can show some upward traction. So one should hold on here and place a stop loss below 175. Now, if that's a call which is emerging right now, but the overall setup does not look encouraging. So we need to see. I'm just sharing this opinion because the budget-based rally which emerges in rail stocks, if it emerges, then she could benefit from that. Otherwise, there is no real cue which can emerge right now for Texmaco Rail.
Okay, no major cue for Texmaco Rail. Let's move to another viewer query. That is, your Satya is asking the entry levels for TVS Motors and the targets for the medium term. TVS Motors, the stock TVS Motors did report a good number for the December sales figures as well. But what are we eyeing out for the next medium term as a stock perspective, Raja?
Yeah, the stock has definitely done well, even on higher time frame charts. If you see the stellar run, month-on-month rise, which has emerged. Now, considering the revival in the auto space and the numbers which are being displayed recently, we can see that TVS Motors amongst the two-wheeler segment could definitely show some upward trajectory here. So one should look to hold on to this stock, and if you're looking at the next, say maybe the end of 2025, I see a target of around 3500 which can emerge, and kind of moves which it has displayed. I'm very certain that this could be a better stock in the two-wheeler segment than your Bajaj Auto or your Hero Moto.
Okay, all right. Very strong commentary. 3500, almost 1000 point uptick that you're eyeing out for TVS. But let's move to another viewer query. That is your Prashant Roy. He's asking on Eicher Motors. Eicher Motors sharp rally came in, 8% uptick yesterday. Today also the stock is flat in the green as well. What are you eyeing next for? Strong December sales figures as well.
Correct. Eicher Motors is another equally competitive stock here. Well, of course, it has multiple segments, but then as a auto component, as a auto major, the stock also is doing well, and the stock shows continued promise. And what is interesting about Eicher Motors is that every dip which you see in Eicher Motors is being bought into. So it clearly says that this stock is well preferred, and it's been tracked actively. So one can look to buy at current levels. You can expect a target towards 7,000 within the next 1 year.
All right, 7,000. Quite optimistic on Eicher Motors then. Let's move to another viewer query. That is your, he's asking on Zomato whether he should sell or hold. What do you think at this point of time? A very stellar up move came in last year. What are you eyeing for this year, Raja, for Zomato?
Yeah, Zomato continues its upward trajectory, and the quick commerce space is witnessing a lot of attention here. Now, if one is looking to invest into Zomato right now, the answer would be no. But if one already has a position, then one could have a revised stop loss at around 245 and hold on to this stock as a long-term play. And one can see a move towards 350 within the next 6 months.
Okay, 350 within the next 6 months. Let's move to another viewer query. That is your Pooja is asking about Shakti Pump. She's bought the stock at 945 levels, and what is the next target price where she could sell? So she's seeing a bit of a profit at this point of time. She's bought it at 945. Shakti Pumps, how does the stock look like on the charts? Recently, it did hit a record high as well.
Yeah, the stock continues to flash record high, and it has been showing some good upward trajectory. And the momentum which we are seeing in all the industrial machinery counters especially the ones which are leading from the front, are quite prolific, and the momentum which is there in this counter clearly suggests that there is more room on the upside. But then the current market situation demands us to keep booking profit or at least trail your stop. So now the choice is with the viewer. But if you have to trail your stop, the nearest stop in Shakti Pump would be in the region of around 850.
Okay, 850 as a support. Well, let's move on to the next viewer query. That is she's also asking about that she's holding idea at 10 rupees per share, whether or not she should average or book loss. Vodafone Idea, how does the stock look like on the charts? We did see bank guarantees relief coming in for the stock as well.
Yeah, Idea continues to wax and wane, and it's not a stock which will move up steadily. But then the stock is definitely under some pressure right now, and the kind of momentum which you are seeing right now in Idea is not clearly indicating any upside out here. So it's best that one at the current levels, it's advisable to book some loss here and then hold on to the balance position, because any move below 7 would trigger more downside.
Okay, all right. So support coming in for this at 7 levels as well. Let's move to another viewer query. That is, your Geetu is asking the view on KPI Green Energy. KPI Green today it's trading at X bonus. Raja, how should she trade KPI Green then?
See, this particular stock is an active participation in the EV theme, and the stock has after hitting a highs of around 1100, stock is showing some profit booking here, and this profit booking can continue because the overall momentum is showing some bit of weakness for the short term. So it's best to exit this stock right now.
Okay, all right. Let's move to another viewer query. That is, your Shweta is asking on RK Forgings for the next 6 months and whether she should average at this price, hold or exit. RK Forgings, Raja, what do you expect? How does the stock look like on the charts?
Yeah, this particular stock has been moving up quite well over the last 1 year, and the stock continues to hold on to higher levels, which is a positive sign. And the recent reaction which we are seeing offers us a good opportunity to enter into the stock. So one should consider this opportunity to re-enter.
Okay, opportunity to re-enter on the stock. Let's move to another viewer query. That is, your Krishna is asking the view on United Spirits. Well, 6 months charts, if we look at United Spirits, very stellar uptrend that is coming in for the stock. Do you expect this momentum to continue in the near term as well?
Yeah, the kind of brokerage reviews which are coming in for United Spirit after a very long time shows that the stock is in very strong momentum. Even on the options front, the continuous OI additions are clearly indicating that this stock is in demand, and the stock is showing some strong upward trajectory. Any pullback in this stock also would be a good addition. Of course, the pullbacks would be at lower levels, closer towards 1550 region. But then this stock is definitely looking promising as either as a trading or as an investing bet.
Okay, all right. Interesting bet at this point. Geetu is asking the view on Skipper as well. Skipper on the charts, Raja, how does it look like? Because it looks like we have the stock has entered a bit of a consolidation after a strong breakout in the month of December as well.
Yeah, again, Skipper is showing some upward momentum here, and Skipper has been one of an active investing play. Now the stock is showing some signs of tiredness, and the possible profit booking scenario can emerge from here. So one should be wary of the levels. If one is holding, the stop loss would be at around 514.
Okay, 514 for Skipper as a stop loss. But let's move to another view query that Palash Mandal is asking the view on HDFC Life, whether or not it is a good time to enter the insurance company. How does the stock look like on the charts? Because we're seeing, the stock hasn't really moved a lot in the past 6 months as well. Very, about like 4% uptick.
Yeah, the insurance space is not getting the right kind of news flows here, with the expectation of the momentum not sticking up. and the kind of news flow is also not coming through. So the insurance as a sector has not really played out in the last few weeks, and with the momentum not sticking up, I would say that HDFC Life is going through a consolidation phase. Well, it's not entered a bearish scenario yet, but then the stock is not giving us any encouraging signs of buying into. So it would be an avoid from my side.
Okay, avoid from your side. Just one last question before we let you go, Raja. What are your favorable buys for this year?
Yeah, my one of the favorable buys for this year, I would like to go in with Vocart because Vocart
Okay.
has been quite a strong performer. It is continuing to hold on and it is showing some good upward trajectory here. So that will be one of the bets here. And on a higher side, I would like to also mention that Naukri has been one of the strong performers in the last year, and the stock continues to show some good upward trajectory. So I would say that yes, it is. It seems expensive, but then my theory is that those are the kind of stocks that become even more. So that would be two of my bets which I would like to concentrate on this year to buy at current levels or also on dips.
Okay, so work hard coming in for you as well. But thank you so much for your time, Raja. We hope that we connect with you soon.
Yeah, thank you. Bye.
All right. All right, let's take a quick check of the markets at this point of time. Well, the markets have extended its sell-off and the selling pressure continues. Sensex is down about 350 points and Nifty is also down about 82 points, seeing a cut of about 0.3% below that 24,200 levels. So yes, the sell-off has extended. Let's see if there is any poise for recovery in the second half of the session, but looks like a weak start for the markets because the global handover is also coming in very weak as well. If you look at the IT index, that is the top sectoral underperformer, down about 0.7%. Nifty private banks not doing well. Nifty bank index also flat in the red at this point of time. If you look at Nifty media index, however, is outperforming. That is up about 2% at this point. India Wix has spiked up very slightly, up about 0.7%. Mid caps and small caps, however, are outperforming. Up about 0.5% small cap gains, and mid caps is about 0.3% gain for the broader indices coming in. But let's move on to the next guest for the show. We have Vinit Bolinjkar of Ventura Securities. Vinit, good morning. So good to have you, and wish you a very happy New Year.
Wish you the same, and thank you for having me on the show.
Vinit, let me start off. Markets did start 2025 on a cheerful note. Today we are seeing a bit of sell-off, but Q3 and Trump's return, that could be the potential overhangs. How do you see the first half of the markets and the second half of the markets to pan out?
For today or for over the month?
No, I'm just dividing it into two halves. Like first half, for the first 6 months, how do you see? For the second half, how do you see for 2025?
So I believe that the markets could be quite steady until the Trump admin actually takes office and uh, you know s- uh, pans out all its measures that it's going to take. And while it's an international event, we should not be unduly concerned. But Trump is the biggest disruptor globally, and a lot of things will change significantly because the policies are world fast from what has been happening today. So, given that, I think it would be prudent to just step back and digest what comes through and then act. So, I would refrain from giving a view on the first 6 months, but I would say that markets would remain firm and steady until the Trump admin comes in. It is followed by the budget also. So Jan should be a very, very steady month. Later on in February and March, we could expect some profit booking based on how things pan out vis-a-vis the Trump and the year-end stock harvesting. After that, in the new year, I think valuations are looking good. They become cheaper, and the new year could roll out a good trend for the markets.
Okay, New York could roll out new trend. But how about large caps, Vineet? They have underperformed in 2024, and we saw that small caps and mid caps gamed. So now that FIIs have remained on the sidelines as well, do you believe that this year too will be subdued for large caps?
See, we have to take one thing into cognizance that the large caps or the indices which are there, which represent the large caps, they're largely services and finance oriented. Majority of the this thing, and the bulk of the growth that is going to come is going to happen in the manufacturing space, and these are not very well represented in the large caps. So I think that the mid caps and small caps, which are planning to manufacture for the world, Atmanirbhar Bharat, and benefiting from the PLI and the electrification scheme which is playing out globally, I think this trend will continue for the coming year.
Okay, this trend will continue. But you said that we need that the valuations have become attractive. But as we go into the earnings season, do you expect any more downgrades to come in, or do we expect that this quarter is going to be fairly better than what we have observed in the last two?
So, while we have seen a lot of negative sentiment about slowdown in consumption, I think Q4 could be much better, and things would get even better as we pan out in the new year. So, I am quite positive on the consumption theme, and hence expect markets to perform very well in that space.
Other sectors that you are expecting to stand out apart from the consumption theme?
So we like the electrification theme, notably the solar energy and the wind energy renewable play, and their ancillaries. We also like the platform companies, the fintech ones, which are Swiggy, Zomato, Paytm, PB Fintech, those kind of companies. We also like the pharma pack. We think pharma is a very secular story. Apart from that, we also like the manufacturing space, as I told you, and we are quite bullish on the metals and mining space, given that we expect the dollar to weaken somewhere down the road, coming into May, June.
Okay. Vinit, you mentioned that expect the dollar to weaken down the road as well. Today the dollar has hit its over 2-year high, above that 109 levels as well. Do you believe that as an emerging market for India, FIs will become even more hesitant to come back?
See, there is no real market where you have such kind of growth. So perforce they'll have to come back. So it would be whether what is the kind of risk that you are ready to take on the currency. So while the currency is playing against India, currently, I expect when the dollar starts peaking out, that is when these FIs will re-emerge and invest heavily in India.
Okay. And when do you expect that to happen for the dollar to peak out? Do you expect it for the second half for this year?
See, the Fed has already spent 30% of its budget, even before the uh, new uh, new president has come in. So, he's got his deal cut out in terms of spending. And already at 37 trillion, and if you're going to go in for a fresh mandate from the Senate for additional funds, I think that is going to cause a real impact in terms of, where the dollar is headed. And I think it's headed down. And I am sure that the US would also want it down because they want to revive their economy. They want to make for the world, and growth is one of the ways that they would benefit. Exports.
Okay, okay. When it came to asset allocation, Vineet, many of the experts that I spoke to, they did point out that the bonds are the place to be at this point of time, because the dollars are rising, and that, the Trump's policies also are quite uncertain at this point of time. So do you concur with this view?
See, we should see the bond yields in the US. That is the main thing to track. And the bond yields are, nowhere off the highs. They're very close to the highs. And as I told you, that the debt debacle is not a problem that can be wished away easily. And so I believe that the bonds will remain firm. And if you expect the dollar to depreciate, you would want to keep the interest rates high to keep the interest back in the dollar. That is the only way to control inflation that comes in associated with the depreciating currency. And so I am in that camp where I believe that now may not be the time to be into bonds.
Okay, all right. But we did speak about, plenty of sectors that you pointed out. How are you looking at financials at this point of time? Because there are some signs of credit moderations, but deposits have picked up, and at the same time, valuations are looking a bit comfortable after the 3 months of sell-off.
So, if we can divide them into three buckets: the private banks, the PSU banks, and the SFBs. I think the SFBs still have their job cut out in terms of managing their rising inflation related to the micro lending that they do. Uh, PSB banks valuations are private sector bank valuations are quite reasonable, and PSU banks are extremely cheap. And the kind of pressure that we saw on deposits last year, I think it's not going to be there. NIMs will moderate. So, given the fact that it's a trade-off between NIMs and reducing costs, lowering NIMs and reducing costs, I think better AUM growth. I think that the PSBs offer a better space for growth out here. And notably, one bank which we think can do really well are the ones who are focused more on the MSME lending business.
Okay, okay. But is it a no-go for the MFI sector? Because many brokerages are also saying that, it's time to be staying cautious because a lot of unsecured lending, slippages are, a big red flag for the sector.
Yeah, so all these things don't clarify within a quarter. They take their toll. So with the first quarter, when you recognize the NPA, then you go in for the collections and then you do the write-offs. So until the write-offs are not enacted, I don't think anything good will happen. So I think once the microfinance lenders start writing off their bad loans, that is the time when one can be buying the blood on streets kind of story.
Okay. Let's talk about budget sensitive sectors. We have railways, defense, and even capital goods as a theme. How are you seeing them to perform in the next quarter onwards as well?
So, defense is a very government-led sector, and very positive on this because the Raksha Mantri Rajnath Singh also came out and said that this is the year of consolidation and growth. So, we are going to see a lot of participation from private sector. More of the deals announced last year, where the private sector becomes part of the, uh, the procurement thesis. And one thing we should not forget is that in a short span of 3 to 4 years now, we have been started exporting in small numbers to 190 countries. So we have an extremely large diversified bucket of export defense that is going to play out. And the four largest defense manufacturing countries, which are the US, Russia, France, and Israel, are all at war. And international, inventory levels are at nearly decadal lows. So strong theme for defense globally, and is music for the defense industry in India.
Okay, just one last question before we let you go, Vinit. Because you sounded very bullish on the markets for this year as well. What is your target for Nifty? Are you seeing 27,000, 28,000? What is it?
So I think that the markets will be more choppy this year in terms of the Nifty, but the mid caps and the small caps is where the action will continue to happen.
Okay, all right. Okay, all right. Thank you so much for your time, Vinit. We are lovely chatting with you, and we hope that we connect with you soon.
Thank you very much.
All right. Let's take a quick check of the markets. Well, let's see how the markets are doing at this point of time. We did start in the green, but then we flipped into the red. Well, Sensex is down about 400 points. Nifty is also down about 100 points at this point of time. 24,100 levels that has slipped, and Sensex is also, below that 79,550 levels. If you look at the Nifty Auto Index, the ones that were performing yesterday, all of them are down. Nifty Auto, Bank, IT index, all of them seeing a cut of about 1/10 to 0.8% at this point of time. On the other hand, what is doing well, that is your Nifty Metal Index and Nifty Media Index as well, and Nifty PSU banks. PSU banks are leading the rally at this point of time and limiting some of the losses. However, what is on the broader end of the markets, small caps and mid caps are holding well. They're outperforming the weak trends, and it is up about 0.5% and more than 0.5% at this point of time. So with that, we've come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell. We will be discussing about how the market is developed, what the stocks are in focus with our market expert. Until then, signing off. Stay tuned to moneycontrol.com for all the news updates and market insights.